Thank you everyone for joining us. Those that joined so early, and you got value, I'm sure, for the past 4 days, and you decided to make sure that you tune in early for today. People that have attended our workshop in the past will not, Dr. Charity won't be strange to them, but allow me to introduce her. Dr. Charity is a Certified Financial Education Instructor. She is an award-winning financial educator, and she's based in America. She's a social entrepreneur pursuing poverty alleviation through financial education. She's the founder and president of WealthyGen, which she founded in 2018 with a mission to empower women and youth through financial education. Amongst her numerous academic achievements, Dr. Charity has a Doctor of Business Admin in International Business from Argosy University, Arlington, Virginia. She's a recipient of the prestigious U.S. President's Lifetime Achievement Award and is also an honored listee of the Marquis Who is Who Publications Board. There are so many things to say about Dr. Charity, and we can spend the next 15 minutes saying those nice things. But we are very privileged to have her come to share her experience, her knowledge with us today. Thank you so much, Dr. Charity, for doing this with the platform and for constantly even giving on your own platform free of your resources. Thank you so much. Yes, and if you go to our website, the link for this workshop, there are so many other things we've written there about Dr. Charity. Thank you so much. I think you can share your screen if you want to share. As a co-host, I think you can.
Yes, I can. Okay, thank you very much. I do appreciate the time today. In fact, I'm always excited to talk about money. Anywhere I hear about financial education, financial empowerment, you'll most likely see me there. So thank you, Dr. Bimbo and team, for what you're doing. It's amazing, the resources you're giving out to empower our people. It's very much highly needed. And I would say that a lot of times, people don't really believe or think that they need all of these things. They need financial education or financial empowerment. But truly, when you sit down to speak to all of us, there's always something that we're getting from it. And people will discover that they actually need something, one or two things from the knowledge that we're sharing. So it's a very important thing that you're doing. And I'm very excited to be a part of it. And today, I'm happy to be speaking about the basics of stock investing. I said the basics because this is the beginner class. And I know that over the past few days, you've learned a lot about money. And we are just going to shift focus a little bit and talk about building wealth. Because I always talk about wealth beyond money. Money is really the foundation or one of the components of wealth. And when we are thinking about financial well-being, it goes beyond just having money or just not having money, because someone can have a lot of money and not have financial well-being, or can have not have a lot of money but still have financial well-being. So talking about stock investing is just one way for us to start building wealth that is just beyond the money we have right now. And stock investing is one of the very common questions I get from people. People want to invest. People want to put their money in something that lets it grow, but they just do not know how to start. They just do not know where to begin. Or even if they know, they just don't understand all of those complex financial terms. I have finance background, accounting, economics background. And when one of the speakers yesterday was speaking, I was going to say that he's kind of bringing out the economics in me. But when we start talking about those complex calculations, charts and graphs and all of those things that, stock investors do or talk about, it scares a lot of people away. And I am here to tell you that you can invest in the stock market. There's a way for you to get your feet in the stock market without getting scared away by all those complex financial jargons and all those charts you see out there. So this is the basics to get you comfortable understanding what is involved in the stock market. When you listen to the news and hear people or the newscasters or even government policies, you'll be able to understand what it means for your wealth, for your portfolio. You'll begin to know what kind of decisions should I take with this government policies that are out there. Or you listen to the news, you'll be able to understand, oh, this is what it means for me or for my pocket. So there's a lot of things to talk about in stock investing, and 1 hour, 2 hours, 5 hours is not enough to cover them. So we are going to use this time strategically to just get our feet in the water, to give you a basic understanding of what stock market is, so you can get started at least. Then as you get comfortable, you begin to understand or even get educated on other more complex topics, okay? All right, so here are the things we are going to learn. We are going to talk about how money grows and get a look at the financial market as a whole. What does financial market mean? What is it involved? And all of that. So we're just going to get an overview of financial market. We're going to talk about investor considerations, because once you become an investor, there are a lot of things you have to consider for yourself. And if I am an investor and you are an investor, what I do and succeed, you may do, you may not succeed, even if we do exactly the same thing. So, and that's where you as a person that is investing have to know what you are considering, so that if somebody is investing in this particular stock, you don't necessarily have to invest because it may not be your thing. So we're going to go over that. We are also going to look at what you should invest in. A lot of people ask me questions. Oh, I have this money to buy stocks. Which stock should I buy? Right? You are going to determine your own investor profile. With all of these things we go over, you'll be able to determine, oh, this is the kind of investor I am. And then that will lead you into the kind of analysis you'll be doing and the kind of things you should look out for as you determine those stocks. Then we are going to go over what are the things, how do we even evaluate and select stocks? Okay. And then we're going to go into actual buying and selling stocks proper. We are not actually going to buy it here. We're just going to touch on the things you need to do if you want to buy and sell stocks. Okay. All right, so why do we invest? If you have answer to that, please put it in the chat. What is the main reason we want to invest? Doesn't necessarily have to be in the stock market though, but investment generally, even though our focus is on the stock market today, but why do we invest? If you have any answer or reason why you think we should invest, please put it in the chat. All right, so in the meantime, the main reason why we invest is for high returns of profit. There are other reasons why we invest, but the reason you would have your money, pull it away from savings accounts or current accounts and put it in investments, stock market, bond market, all of that, is because you want something higher. Otherwise, you will leave it in savings accounts and earn maybe pennies and cents on the dollar, on Naira. But you are putting it into stock market because you want something higher, want higher returns, you want to make profit out of it. Okay, so that is one general reason. And to say that, you know that inflation is mostly obtainable in every economy, right? When you buy something today for 100 Naira, if you go back to the market to buy that same thing in the next 1 year, you probably will not buy it for $100, 100 Naira. So the price of things change every day or every month or every year. So price of things today will not necessarily be the same price you buy that same item next year. So because of that, when you have cash, $100 sitting in your savings account, next year you go back and take that 100 Naira to buy something, you will need more money on top of that 100 Naira to buy that item. So that 100 Naira you have, it's no longer worth 100 Naira. Now, when you put your money in savings accounts, you don't necessarily get enough interest or enough returns on your 100 Naira to cover that value that inflation has eroded from your cash or savings. That is one reason why we invest in the stock market, or we put our money in investments for higher returns, simply because the higher returns we get from our investments will be most likely at least higher enough to cover the effect of inflation on the price of things. So if I have 100 Naira, you put yours in the savings account or just hold the cash, I put my 100 Naira in investments. Come next year, the returns I would get from my investments will pretty much be okay to cover the effect of inflation. Whereas if I held that cash, it would just be 100 Naira. I will no longer be able to buy the things I would normally buy with my 100 Naira. So that is really the main reason for investments, because of inflation, and the returns that we expect from our investments should be enough to counteract the impact of inflation. And that helps to grow our money. And we're going to come on to that next, okay? All right, so how does this money grow? How do I grow my 100 naira to something higher, 200 naira, 300, 500? I have 10,000 naira. How does that money grow from 10,000 to 20,000 in my investments? All right, so I know a lot of you will think, I ask this question sometimes, someone said money grows on trees, all right? But we wish that money grows on trees so that people can just go out there and pluck money from the trees. But really, money grows through returns. Money grows from the returns that we get from our investment. That's just one component. Someone would say, I'll put my money in savings account and just make interest. That's okay. It may not be high enough, but the profit you earn by investing your money is how money grows, one part of it. And then there is another key component that you should know of. I know you've learned it over the course of the session. I heard of it yesterday, telling me that you guys learned that concept. And that is concept of compounding growth. Now, if you take anything away, if you do not take anything away from this class or from this program, keep in mind that compounding growth is a key thing that you need to walk away with. It works in both ways, in everything you do. It works positively, it works negatively. It can work for you, it can also work against you. Yesterday, we talked about credit and interest. And we talked about how interest can continue to grow if you do not pay on your debts with higher interest and all of that. The same way your money can grow through the effect of compounding growth. And compounding, as you would have learned, is the return you earned on your returns. If I put 10,000 naira or 100,000 naira in my investments and I make 10,000 naira out of it, if you want your money to grow exponentially, I would not take that 10,000 naira and go shopping. I will put that 10,000 naira back into my investments so that next time they are paying me my dividends or my interest, whatever that is, they're going to pay me dividends on my 100,000 naira principal and also on the 10,000 naira dividend they already paid me before. Now, that's how your money compounds and grows. It is through the return, number one, and then through the compounding growth. That's the returns I earn on the return I previously earned. That is the magic. If you're able to compound your growth, compound the returns of the growth of your returns, that's how you grow your money exponentially. And someone will say, how will you do that with the stock market? There's something they call DRIP. DRIP is Dividend Reinvestment Program. If you invest money in the stock market, in the stocks that pay you dividends, and when you receive your dividends, a lot of people will take that dividend away and go shopping. But if you are someone that is interested in growing your money exponentially faster than ever, then you will put that dividends back to purchase more stocks. It's called Dividend Reinvestment Program, DRIP. So when you hear about DRIPs in the stock market, that's really what it means. Is a way for you to compound the growth of your returns, okay? So whenever you eventually start investing, make sure that you enroll yourself in that DRIP program. Most stockbroking firms do that. It allows you that once you get paid dividends, you don't even have to worry about the dividend will automatically be converted to shares for you so that next time they're paying you dividends, that you'll have more shares that you will get paid dividends on. That is the effect of compounding growth. All right, so saving and versus investing. You're going to cover a few of the, this is really housekeeping. Before you start investing, things you should be mindful of. Why invest rather than saving? Or what's the difference between them? The things you should know. Okay, so I'm just going to do all of that. Start from the first, goals, okay? What is your goals? The goal for saving is really for short-term goals. You're saving for something that I need my money in the next 1 month, in the next 2 months, or maybe something happens. I just want to have access to my funding. Goals can help you. Savings can help you do that. You can just save your money. There's no need for you to invest if you're just going to go get the money. But if you are investing, be sure that you are ready to leave that money for longer term. So you are putting your money away for longer term goals. So if you need your money in the next 3 months, I wouldn't advise you to put that money in investments. you would rather put in maybe a high yield savings account. That's why it's important before you start investing, make sure you have your emergency fund already in place so that if anything happens, you're not looking to liquidate your investments. You're just going to use your emergency fund to take care of that, allowing your investment time to grow. Because one thing you should know is that investment, the growth of your money through investment is the time you allow it in the market rather than timing. Okay, there's a saying that says, rather than timing the market, when should I buy so that I can make money right away? Do not time the market, but it depends on the time your money or your investment has in the market. It is time in the market rather than timing the market. I hope you get this. Anyway, so the other is
Dr. Charity. I need to check something with you. Did you join with two machines?
Say it again.
With two devices? Did you join with two devices?
No.
Okay, thank you.
Sure. All right, so the other is income and value. Investments can increase in value and provide current income or offer both. Investments can provide increase in value. It can provide current income. It can offer both. Meaning, if you have your money in savings accounts, they pay you interest. That's basically it. It's just going to give you income, extra income through savings. But if you are doing investment, it can also give you that extra income through interest or dividends. It can also increase in value through capital gains. If you bought something for maybe 1,000 naira and it's now selling for 2,000 naira, it's increasing value in addition to the income that you're getting. Then insurance, this is important. I like to say this clearly, that your savings are federally insured. In Nigeria, it's NDIC, Nigerian Deposit Insurance Corporation, insures your savings account up to 5 million naira. Now, if you have your money in the bank, savings account, current account, if anything happens to that money, the government can pay you back up to 5 million naira. So I say this to say, if you have over 5 million naira in one bank, I wouldn't advise that. I would split it, put 5 million in one bank, put another 5 million in another bank, or whatever is the difference. Because if that bank should fold, government can only pay you back, or MDIC can only pay you back up to 5 million. If you have 10 million, the other 5 million is gone. So I wouldn't keep more than 5 million.
Hello, Dr. Charity. Pastor Lee, is she frozen at your end as well?
That investments come with risk, and that is the next. I would, for those, it's not going to be everybody, but for those who are willing and ready to actually learn how to do this. And that is if you are willing to do that yourself, because there's a lot of management companies that you can engage to invest and manage for you. But if you're willing to learn how to do it yourself, you can log into your account and actually trade. That is a program for you. When details come, like Ms. Mimba said, if you follow our page, when details come, you would get notified and on how to register and be part of the program. So it will be a good thing. There's a lot of opportunities in the world for us to grow our wealth and achieve financial well-being. But the key to being successful is really understanding how these things work and knowing how to do that confidently. And that is the end goal of this program, to teach you to be a confident stock investor, or not just stock investor. Like Ayodeji said, once you have the stockbroking account, you can do a lot of that. You can trade in stocks, you can trade in bonds, and you can trade in other derivatives, but you have to understand what you're doing. So yes, once we get that information, we'll be able to share that with you once it's available.
Thank you very much, Dr. Charity. There's one question that is pending, and I think now you have to put on all your hats, so I don't know which of your hats you want to put on. And the person says, how do I know the performance of a company I want to invest in? How can I check the performance of the company that I want to invest in?
There's a lot of, well, not a lot of things. There are some things you have to look for, and we didn't get to. That's kind of, if you have the time, I can maybe see if I can share my slide to go over the 2 slides that we kind of skipped. What you are going to be looking at.
You want to do that now?
Let me see.
Yeah, you should still be.
Yeah, just I think 2 or 3 slides that will show you how to kind of analyze those financials. Let me see if we can. That's not going to be comprehensive, but at least it's going to get you started. Okay, so, all right. So we talked about an income investor, someone that is interested in just getting monthly income or quarterly income or income every year, as the case may be. If you are that kind of investor, I always tell people, I always ask me, what should I buy? I say, I can't tell you that until I know what kind of investor you are. If you are an income investor, someone that is interested in dividends, you are looking for completely different things. So you are finding stocks that pay regular and consistent dividend. How do you do that? If I'm looking at Zenith Bank, I'm just going to search Zenith Bank and find their dividend history. So I'm going to look at their dividend history to see, is it regular? If they say they pay dividend every quarter, I'm going to say, did they pay the first quarter of 2020, first quarter, second quarter, third quarter, fourth quarter? If they are consistent 2020, I'll move on to 2021, I'll move on to 2022, 2023. If they've been consistent, I'm going to look back and see how far back they've been consistent. Consistent dividend payer companies continue to pay dividend every quarter or every month or every 6 months. Whatever they decide, you will see the history. So that's the first thing you do if you're a dividend growth investor. Search MTN dividend history. Is a simple search. I know in Nigeria, you have to dig a little deeper to find stuff, but search regardless. Go to their website, go under the investor section. You are looking for their dividend history, or you go Google, search it online. Name the name of the company, dividend history. You're going to see the dates and how much they paid. And you are looking for high dividend growth rate. I'm not going to stop there seeing that they've paid consistent dividend. I want to see how are their dividends growing. This is me as a dividend investor, okay? If you're a dividend investor, this is what you're looking out for. Growth investors may not even look at these things, but if you're an income investor, this is what you should be looking out for yourself. I'm going to say, okay, last quarter they paid 10 naira. And this last quarters, they paid 10 naira. Last 3 quarters, they paid 10 naira. And I'm looking all the way back to 5 years, they continue to pay 10 naira. And their dividend is not growing. I want to see growth. Because they can't tell me that they've not made money beyond how much they're giving. As a dividend paying company, I want to see growth. In as much as you're consistently paying it, but I want to see 10 naira, 11 naira, 12 naira, or even 10.50, 10.80. I want to see growth per quarter. That's what's going to tell me that this is a good dividend stock. And then I'm looking at yield. Stocks that have high yield. High yield is, this stock pays dividends, that's okay. But if I'm going to do a little math here. If I have 1,000 naira to invest, I like to use simple, small numbers so that we all can do that calculation on ourselves. I have 1,000 naira to spend, and I'm going to use just MTN and Zenith Bank as examples. These 2 companies pay dividends. Which one am I going to buy? They all have consistent dividends. They have good dividend growth rate. But what is the yield on the dividend? I'm going to say MTN, it sells for maybe 100 naira per share, and Zenith Bank sells for 50 naira. I have 1,000 naira. If I buy MTN, I'm going to get how many shares? 10 shares of MTN at 100 naira. If I buy Zenith Bank, I'm going to get 20 shares. Okay? I'm going to buy 20 shares. 1,000 naira buys me 10 shares of MTN or 20 shares of Zenith Bank. Now, how much are they paying for dividend? MTN might be paying 10 naira. This is too much, but I'm just going to use this number so that it will be easy for our calculation. Pays 10 naira dividend per share. Zenith Bank pays only, let's just say MTN pays let's just say 5 naira, okay, per share. Zenith Bank pays 7 naira per share. Now, remember I have 20 shares, 20 times 7. How much is it? If I have 20 shares of Zenith and they're paying 7 naira per share times 20, I'm going to make 140 naira in my dividend. Then MTN pays 5 naira per share dividend and have 10 shares. 5 times 10 is 50 naira. Guess what I'm going to choose? Between 50 naira and 140, I'm going to use that same money and buy Zenith Bank shares because the dividend yield is higher. So now, if I do 140 over 130, my capital investment is 1,000, right? 1,000, and I'm going to get 140 naira for my total investment. 140 divided by 1,000, my yield is 14%. But if I do 50 divided by 1,000, it's only 0.05. So that's how you calculate your dividend yield. In the link I shared before, you will see the yield even without doing the calculation yourself. If you go on here, you will see the dividend yield. I believe they should have dividend yield here. So you can see that this is cement. Dangote cement yield is 5.64%, and this is the initiate is 3.14%. I'm looking for, if I'm an income investor, I'm looking for companies that have higher yield. That's the third thing I look at if I'm a dividend investor. Okay. So for your question, these are mostly the 3 things. As long as the company is strong, okay, to invest in, you are going to be looking at these 3 things as a dividend investor. Now, as a growth investor, you are looking at something different. You're not going to worry about dividend consistency and yield and all of that. You are going to be looking, that's really where technical analysis comes in as a growth investor. Remember, I'm going to use tech stocks as an example. They have all the hypes. Well, when AI came in, there's a company, a stock that's called NVIDIA. Is a talk AI company. It used to sell at, I think, in the range of $20 some years back. But with the, hours of AI, everything is AI recently, that stock got up to $300. People that bought it $19, $20 cashed in on it because that is what happens in the tech industry. There's so much hype in it that once that hype comes in, boom. So you are going to be analyzing what are those stocks that have that potential to just grow like that within a very short time. So you are looking at price to earnings ratio, PE ratio. In your analysis, this is really what you're looking out for. And PE ratio is really how much are investors willing to pay per share for $1 in earnings. Because the goal is that these companies will do so well, they will earn a lot of money for their prices for them to grow. So investors are looking to say, okay, this company is going to do so well. Their PE ratio is higher because investors are willing to pay more money for $1 or 1 naira in earnings. So if you're a growth investor, you are looking for stocks that have higher PE ratio. In that link I sent, you would see PE ratio against each stock. So that's a good measure for you. If you're a growth investor, you have options to look for. You are looking at PE ratio for every stock that you're looking to buy. There are other things. Again, always look out for the books. Make sure that the financial, their income statements, their balance sheet, look at the asset level. And one other thing I also look out for, it's not on this lead, but it's other consideration, is look for companies that are big, high cap. Cap is capitalization, right? What is market capitalization of these stocks? I think it's on that link I sent as well. I'm not looking to buy companies that are relatively too small. You want a company that is as big and, well, not as big, but even if it's a new tech company, they're investing money in the business. They have capital. They're investing money in their capital base. That's how they're able to grow the company. Even if they are not investing too much now, you know their business plan, research and see the potential where they are headed to. That's going to show you the kind of capital they're pouring into the business. And that's why they are not paying dividends, because they're pouring capital into the business to enable it to grow. Okay. Now, value investing. If you're a value investor, remember, value investors are patient, right? They're patient. They think that this company is undervalued, so they are looking to see that they're using what they call fundamental analysis. You may not do so much of technical analysis, but you're looking at their books. Their income statement is strong, their balance sheet is strong, cash flow is strong. There's just something that's making their value, just like Ayodeji said. It's Forex for MTN. It's just this thing in the news that is making their prices to fluctuate. MTN is a good opportunity for value investors because they know that once they sort out this thing that's it's not a major structural thing, they just need to sort out their Forex issue, they'll bounce back. Value investors, this is the time for them to get in because they know that this is not their true value. They are underperforming their price to their book value. And that is, for this question, you are studying their books. What is the value of their assets in their books, in their balance sheet, right? You know that this is really what it should be. Let's just say maybe 100 and maybe 200 naira, but they're selling at 100 naira or maybe 150 per share, example. Then you will know, oh, by the time but when things turn around and they fix their Forex thing, their price will come back to normal. And once it comes back to normal, that I'm going to sell and make money. So you are looking at price to book ratio, PB ratio, price to book. You are comparing the price of the stocks to their book value. It is lower for stocks that are undervalued. If the book value is really 200 naira and they are selling at 100 naira, I know that this is a good value stock for me. Okay, so these are the kind of analysis you're going to be doing as a potential investor, as an investor. Again, don't forget your beta. Beta is going to tell you at least generally how risky it is. And then you're also going to be looking at volume. For growth investors, they're looking at volume. I missed that in the slide because volume is how many people are trading on this. So that when I'm ready to buy, when I'm ready to sell, there will be enough people willing to buy it for me. In that link, I think there was a company that has volume 0 or 0 point something. There's not a lot of people trading on it. What if the price is right and I want to sell and there's nobody really willing to buy it for me? I'm going to be stuck with it. So in as much as you're looking at all these things, look at volume, make sure that there are a lot of people trading on it so that when you're ready to sell, there'll be people willing to buy. Thank you. I hope I answered your question.
Thank you very much, Dr. Charity. I think I should let your voice take a break. I should let your voice take a break, and I would add some of my young friends. They want us to hear their voices. So they said the questions have not been dealt with. I promise to let is it Adewale Musumola? I think so. Do you have a question? And then King David. Okay, King David, I've asked you to unmute, and Musumola too.
Okay, good evening, ma.
Good evening.
Good evening, everyone. Okay, please
tell Dr. Charity your age. You know, and even
okay.
if you told us they were forgotten, tell us your age, everyone, before you ask.
Good evening, Dr. Charity. I'm 11 years old.
Okay, good evening.
Okay. My question is, I have 2 questions. The first one is, when you invest, what can you do while waiting to avoid taking from the money that you invested? And the second one is, please, can you elaborate more on stocks and also on shares? Thank you.
Okay, thank you so much, King David. What do you do when you invest? You wait. So yeah. So there's this thing about investing it doesn't work for everybody. It doesn't work for growth investors, because growth investors don't really wait. They just want to get their money. Some of them like to wait, but they just want to get their money, get their capital gains right off the top of it. But I don't know if you've heard about Warren Buffett. Warren Buffett is a famous investor, and he's a
Yes, I've heard about it.
Great. He likes value investing, and one of the things he says is that if you're buying a stock, if you're investing, think of yourself that you're establishing a business. And if you are not willing to own that business for at least 10 years, then it's not a worthwhile investment. So he proposes, well, even though things might be shorter than that, but assume that you are going to own this business for the next 10 years. That is really the time you need to wait. Again, that means, what it means is that you shouldn't just invest in one stock and then wait. That's why you have to kind of diversify your investments, have stocks, have bonds, have the fixed income, like treasury bills and CDs and fixed deposits in Nigerian case. So right now you are in school, so you can do that. And then you still, I think there is what they call, I don't know, I believe Nigeria should have it, account for underage, that they will be under your parents, so that when you become an adult, it will transfer to you. So your parents will still be managing that for. It's going to be under your name, but your parents will still be managing that until you become of age. Then they will transfer it to you. So while you are in school, you can just focus on your school studies. Do that. If you're working, if you're an adult and you're working, you're doing other things, invest and continue what you normally do on a daily basis. And that will allow your investment time in the market to continue to grow and compound for you. Then on stocks and shares, stock is an ownership, right? It's an ownership in a company. And when it's kind of, you can use them interchangeably. When you buy stocks, you're buying a share. It's like pizza, round pizza, everybody's getting a piece of the pie. So a piece of the pie is just your own share of ownership. If the company is worth 10 million and I buy 1 million, I only have 1 million share of the company. What I bought is the stock. Stock is just the ownership, but I have just a piece of share of the company. So when you think about stocks or shares, it's just a piece of ownership of a particular company. Unlike bonds, you don't own the company, you are just lending them your money, whether it's government or corporations, that they will pay you back plus interest. Okay.
Thank you very much, Dr. Charity. Yes, you're welcome. Taiwo Adediji, do you still want to ask a question? You said you want to speak. Taiwo Adediji. So I've allowed you to speak. And I saw in the comment box that you have a question.
Yes, ma'am. Good evening, ma'am.
Yes.
Good evening, ma'am.
Good evening.
Good evening.
My name is Taiwo Adediji, and my question is that, is it possible to buy different stock, like stocks from different banks? And will I still use that same account to check my balance, like the dividend account, for both shares? Or
yes. So I wish that Ayodeji was still here, but the essence of having a brokerage account is like a central place where you buy all of the different stocks you want. You can buy MTN, you can buy Zenith, you can buy Wando, you can buy any stocks you want. Once you log into the account, you are going to see all of them. Then when they pay you dividends or interest, you can still go in there and see it. So that's the essence of having a brokerage account. You don't have to go to different places to buy it individual. One brokerage account can connect all of your assets, and you can always see your performance for each of them in that particular brokerage account.
Okay, we have to be fair to Dr. Charity. She's she will have to prepare for work tomorrow. So I'll take just 2 more questions, Dr. Charity. But before I take the next question, you have this annual program that you do for young people. I think it goes for like a week, or is it 2 weeks or a week?
It goes for 8 to 10 weeks, once a week, usually every Saturday, for young people.
What? Why do you have no absence?
So, yes, we do a program for young adults beginning at the age of 11, actually. Some 10-year-olds join, and it's okay because it's good for them to come in and be hearing that conversation earlier on. So even though we say 11, anyone can just come in and sit and listen. If they ask a question, we'll try to address it to their level, and hoping that as they continue to hear that information, they will begin to understand it better. So so we have that program. The essence of having is so that we can, when we come in there, we break it in the most simplest language and the level that you understand. We also have programs for adults that we do once a month, everyone. So make sure you follow our page, like Mr. has said, so that once we announce that, you will be in the know. But it's usually runs through, we cover 10 different modules, touching different things, touching credit, touching investment, touching entrepreneurship, touching savings, all of that, so that once you come in, you learn about everything that you need to start building your financial future.
Yes, thank you very much, Dr. Charity, because my nieces and my nephews have been part of that program in the past, and it's been very beneficial to them. And Dr. Charity has a way of forcing you to participate, because you get some coins, he gives tokens, dollars out, to make sure that your students are participating. And I've listened to, some of the lectures, the modules. It's been very good. Do you have an idea of the months yet, or we just have to check on your page?
I don't have the month yet, but I would, once I have it, I'll be sure to send it to you, so that even if people that are not in my network, you can always pass it on to them.
Okay. So yes, thank you. So what we're trying to do is that for the young ones that we've not been able to break down, things that you need to understand and learn more, we've tried our best in the first 3 days to make sure that we come to your level a bit. But if you want to continue to learn and be financially educated and, get the right habits on time, please, some of you have asked to join the Young People's Finance Code PK Wealth Club. Some people said they've sent emails, but please, if you like to join the Wealth Club for young people, just put it in the chat box, your name, your email, and I will make sure that I add you on, even if you haven't sent an email already. And now this program that Dr. Charity is talking about, when it's launched or when she's giving us notice that it will be happening, I would send an email to all of you who are members of that club. And then you'll be able to participate. Please make sure that you put your email and your contact details in the chat box so that we can reach you. Thank you so much, Dr. Charity. I promise I will take 2 more questions. The chat box is I don't know, it's hot. Favor Richard, excellent. It's hot. So let's take, I think Nkechi, I would let Nkechi speak. Let me just give her the right to speak, because she seems to have a hot question. Oh, I'm just assuming it's a lady. It can be, I'm sorry if I'm wrong, allowed to talk. That's Nkechi. Can you talk now on the... Oh, sorry, Ngozi. I clicked on your name. I'll leave you on so that you can talk later, Ngozi. Njoku Nkechinyere, can you unmute? I'm asking you to unmute. Okay.
Ma'am, my question is, how do you create a domiciliary account?
Sorry, your age, please. How old are you?
16.
16, okay.
16, ma'am.
So domiciliary accounts, you have to do that in your bank. It's something you have to walk into the bank, wherever you have bank account or you would like to open domiciliary account, because it's really a bank account, just that you would operate it in foreign currency. Yeah, so you can always Okay.
She's gone.
It's been
She's gone.
please.
I was
Thank
going
you,
to say,
I
now
know
we
it's
don't know
better.
the age limit because we'd have to check the age limit in Nigeria for that to be open. But like Dr.
Okay.
Charity said, it's just like opening a bank account. So if the bank's if the age limit to open a DOM accounts, if you're above that, they will certainly open it for you. So that's the hot questions. There was somebody else.
Okay.
Are you okay, Njoku?
Not really. Okay, at my age now, can I open a domiciliary account?
You will have to walk into the bank and be sure. I don't know right now what age they allow to open domiciliary accounts, but it's just like opening any account. So you can walk into any bank that you choose. You're 16. If they're opening DOM accounts for 16-year-olds, they will open for you. Otherwise, you have to maybe open it in a parent's name or something. But you can send me an
Okay,
email if you're unable to ask. If you're unable to ask, I can just do a phone call to a bank for you. But I'm sure you can walk into any bank. Is that okay, Njoku? All right. Okay.
Yeah.
What's your first name? Is it Njoku or Nkechi? Which one?
Njoku.
So your first name is Njoku.
Yes, ma'am.
All right. Thank you for being part of this program.
Thank you, ma'am.
Wow. So many people want to talk. Who will be this last person to talk? Ngozi, thank you for staying with us. I think I'm going to yield the floor to Ngozi. She's my friend, and she's a regular member of the platform, and she's also a coach. It's just that she doesn't coach about money. She coaches about healthcare. Ngozi, can you unmute and please encourage Dr. Charity and my other speakers on behalf of the participants? I'm asking you to unmute.
Can you hear me?
Yes, we can.
Oh, thank you so much, Bimbo. Thank you, Dr. Charity. Thank you for all you do. We really appreciate your spending time to teach these young ones. And even me as an adult, I've learned so much today. And we'll just keep the torch flying. And please, Bimbo, keep sharing like you do. And we'll keep encouraging the young ones to come on the platform. Thank you, everybody.
Thank you so much, Angie. Thank you for always encouraging. She's my old schoolmate. We've been friends for, that would be like 40 years now, right, Angie?
Wow.
But
Yes.
she
Yes.
encourages me and lets me know that, look, the effort is worth it. So I wanted you to hear her, Dr. Charity. Yes, can you all help me encourage Dr. Charity and the other speakers? Dr. Theo, I tried to get you to speak, but I don't know. Dr. Theo?
All right. Yeah. Good
Any closing
evening.
remarks? Okay, great.
Good evening. Good evening. Sorry, I stepped away briefly, and I'm sure it was that period that you called me.
Okay.
Thank you, Dr. Charity. I followed you everything that you've spoken. Quite interesting. Just like the previous immediate speaker said, even though it was for younger people, but older men like us too have learned greatly. And thank you for the encouragement for us to invest. And there's no time that is too late to invest. So thank you so much. We would follow you. We will want to learn much more. Please avail your platform unto us so that we can always learn. There's no end to learning, and nobody knows it all. Thank you. Thank you. God bless you. Thank you, Mrs. K, for what you're doing. It's great, all right? As I've always said, God bless you. Thank you. Okay.
Thank you so much, Dr. Theo. You know that without the likes of yourself, Dr. Charity, Coach Tola, Pastor Nee, Coach Mata, you know, and who else have I missed? Coach Bella, you know, without you people easily and freely giving of yourselves, I can't do this alone. So I'm very grateful.